In this video, traders, we're going to look at 4 reversal patterns you should know as a new trader. Stay tuned. Hey traders, a very warm welcome to a video for you new traders out there, or maybe intermediate traders who want a bit of a brush up. Welcome to the channel. Okay, so we have 4 reversal patterns that really, if you're a new trader, you need to kind of get to grips with and understand. If you want to trade reversals, these are the 4 basic fundamental patterns that mostly are the foundations for other kind of patterns and strategies and setups. So get these down, understand these, flick through your charts, and so you can get a good idea of visualizing these, and you'll have a good foundation to move on with. Right, okay, let's get going. Number 1, head and shoulders. I'm going to draw these in, and I'm going to draw them as they should look textbook style. In the real world, you might get little tiny differences, but ultimately head and shoulders is this. You have a drive higher, you have a higher high, so it looks pretty much like a standard trend so far, right? You've got a high, you've got a low, pullback, a higher high. This time, this now comes back down to kind of here. Now this is where, you know, it might be slightly different depending on the chart you're looking at. You might get a little bit of a low here. It might be angled slightly. It's never going to be symmetrical, but if you've got this in your mind and you kind of take a screenshot of this or whatever you need to do, or go and Google it, this will give you a sort of pattern to look for in a chart. Then you get one more kind of effort to push up by the balls, and then it rolls over. So the idea is this is your head, this is your left shoulder, and this is your right shoulder. So that's why it's called head and shoulders. And textbooks will say, let me use a different color pen, let's go with the purple. Textbooks will say that you short on a break of what's called the neckline. So that's the neckline there. Okay, as the market breaks there, you go short here. That's the idea of the trade. And obviously, if you are buying an inverse head and shoulders, would be the same kind of thing. Your shoulder, your head, your other head, there's your neckline, and you'd be going long. Okay, so the reason it works, and the reason they kind of call this pattern and why people look for it is that it's the balls are pushing up, the balls push up again. This time they can't push up as high as the prior high, and that gives you a little bit of a warning sign. And then finally, when it breaks through this support level, which is now the neckline, then you're all clear to go short. And another further thing that a lot of textbooks will say is that the distance between the head and the neckline, so whatever that is, if that's 70 pips, for example, or 100 pips or 700 pips, depending on what time frame you're using it, you can use it on a shorter time frame or a higher time frame, you can extend the target the same distance between, so you can extend your target 70 pips to the downside here. That's what textbooks say. Does it work or not? In theory, it works well. And actually, this is the kind of pattern that you look for to say, hey, you know what? Things might be turning here. Whether or not you take every single pattern that comes up and shows you the head and shoulders shorting through that neckline, I wouldn't recommend it. But it's something to be aware of. It's a pretty standard pattern. Keep an eye out for that. That's your inverse. That's your standard one. As I say, it could be flat like this. Well, this is not quite flat, is it? It could be flat, could be sloped. You could have a big head. These shoulders might not be symmetrical. So there's little variations of it, but that's kind of the fundamentals behind it. Well worth looking at, and well worth kind of flicking through some charts to see if you can see some of those guys, because you know, they can be very profitable in the right conditions and the right environment. All right, number 2, double top or double bottom. Pretty much as it says, really, a double top is the market pushes up, comes down, pushes up again, fails, come down. The idea is you're selling it 2 ways. You're either selling it as it comes up and fails there, so you're going short here, or you're waiting for a break of this low here and you're going short. I can't spell short. There we go. You're going short as it comes through that low, and then your idea is it's going to fall and fail. Same kind of thing. Supply demand shifted. You've got a lot of demand coming in. Demand coming in can't make it above the high, causes that double top, which is the first top, the second top, rolls back over. There's your short trade. Flip it on its head for the double bottom. Again, this is kind of fundamental stuff, guys, that are the foundations of bigger, more advanced strategies, and are well worth looking at. Flick it on its head, low, low, push up. One of my kind of favorite reversal type patterns. Pretty simple, but it makes sense. Supply demand shifts, can't get through, bang, push back up. Like I said, the options are you're taking it on another tag of that starts to push back up anywhere between here and there, or you're waiting for the break and taking it through there. All right, that's your double top. Next one we've got is triple top or triple bottom. Pretty self-explanatory and very, very similar, but a little bit more powerful because it's showing a bit more intense. So you've got a triple top will be your first go, your second go, and your third go, and then it fails. So again, you've got a very clear line of resistance there. And again, I've kind of drawn it where this doesn't necessarily have to be symmetrical here. This could be lower, could be higher, any kind of permutation of that. The point is you've got 1, 2, 3 tags of your high. That causes price to eventually roll over. You're either selling it on the third tag, you're probably taking it on the second tag if you were doing a double bottom, or you might have just come across the chart and seen this triple top and said, okay, we've got a triple top here, market's moved up, off screen, pushed up, we're struggling at this level now. I can frame a trade, I can take a short here, I can never stop above the high, and I can look for a rollover and a bit of a counter trend move. And exactly the same for a triple bottom, just flipped on its head. I probably don't need to draw that for you, it's pretty self-explanatory. Okay, a rounding top or bottom. These are a little bit harder to spot actually, and not my favorite type of patterns because they can take quite a long time to come to fruition. But let's give the longs a bit of love now. So really you have this kind of scenario where it's sort of pushing down, and it just, exactly as it says it is, it's rounding. And if you've got a candlestick, you're going to be seeing, you know, these kind of candles pushing down here like this. But you get the idea. The point is you have this kind of scenario, a little smile formation, rounding as in bears are just running out of steam a little bit, buyers are just starting to push it back up, and ultimately it's just a slow turn of the supply demand. Entry point is really if you can find a decent resistance level to take a break there, or preempt it and say, hey, I can see a little bit of a curl, maybe volume's dried off a bit, maybe momentum's died off to the downside. It wasn't that quick going into it anyway. It's taken several days, several weeks, more of a swing trading pattern this one, several days or several weeks to curl round. Hey, let me take a long position now, let me kind of frame my risk under that low, let me add to the position as we go up and see if we can get a full reversal up for a multi-week move. All right, guys, there's 4 reversal patterns I think you should know if you are a new trader. Thumbs up if you like this kind of stuff. See you in the next one. Take care. Keep the risk managed. Goodbye.